All right. Hello, everybody. Welcome back to another Market Open. Here we go. March 15th, 2023. 15 days into March. We have 15 days left, and then we're going to be in April, which is the fourth month of 2023. It's going by pretty quick, but we're here. We've got a lot to talk about. We've got a lot of things going on in the markets today. Bitcoin is for bears. Philip, what's up? Nice beer to me. Bogdan, thank you. Ray, what's up? Howard Napster, what's up? Drew Cameron, what's up? Kane, what's up? All right. We've got a lot to get into. Alvarado, you real glitch life. Thank you all for being here. We've got some things to talk about, primarily that have to do with the PPI and Credit Suisse. The reason the market is tanking, and the market is absolutely tanking. S&P at 385 this morning when we ended at 392. Palantir down, Snowflake down, DNA down, Tesla down. The reason why everything is down is because we've got another bank that potentially is going to fail, even though we've got some really awesome PPI news, right? So PPI data came out. Numbers were looking very good. 4.6 versus 5.4% estimates year over year. Negative 0.1%. Versus 0.3% estimates month over month. That means we thought we would increase, and we actually decreased month over month. And 4.6 versus 5.4 year over year, meaning we beat that number pretty substantially. For those that don't know what the PPI is, it is the Producer Price Index. Essentially, it's how much producers are willing to pay or have to pay for the goods and services that we have to pay. If there is a higher PPI, there will be a higher CPI, because if it takes you, $50 to make a hamburger, we have to pay 51 as consumers, right? Because there has to be some profit there. So if the CPI came down yesterday, which it came down reasonably well, then the PPI should also be coming down. The problem is we've got Credit Suisse, and I'm going to share this right now. And that seems to be kind of the biggest issue. Philip, Mike, Felicia, Jeff, Jason, Paul, Roy, Mark, thank you all for being here. Remember when ChatGPT said today would be the day the market crashed? LOL dumb. Yes, ChatGPT did predict that March 15th would be the day that the market crashes. And well, it's right so far. So Credit Suisse shares tank over 30% after Saudi backer rules out further assistance. Credit Suisse's biggest backer, Saudi National Bank, has said it won't provide further financial help. Shares of embattled bank Credit Suisse hit another all-time low. So this was a stock that was already falling. Now it's down 96%, which is obviously pretty bad, right? Over the past day. So the share price rout renewed a broader sell-off among European leaders, which were already facing significant market turmoil as a result of the Silicon Valley Bank fallout. Several Italian banks on Wednesday were subject to automatic trading swappages. Credit Suisse's largest investor, Saudi National Bank, said it cannot provide the Swiss bank with further financial assistance, according to a Reuters report. We cannot, because we would go above 10%. It's a regulatory issue. That means like how much money they would be able to lend them. And even though it is a regulatory issue, they probably also just don't want to help a bank that's failing. The Saudi National Bank took a 9.9% stake in Credit Suisse last year as a part of the Swiss bank's $4.2 billion capital raise to fund a massive strategic overhaul aimed at improving investment banking performance. However, it's not working. When asked if he would rule out some kind of assistant, Lehman answered, that's not on the topic. We are regulated. We have strong capital ratios, very strong balance sheet. We are all hands on deck, so that's not the topic whatsoever. Now let's go to their actual stock price, and let's see kind of what we're looking at here. Obviously, investors are losing a massive amount of confidence in this stock. And, you could also, you can understand why investors feel that way. There you go. Credit Suisse, it was $2.51 yesterday. It is $1.80 today, down 28%. If we go to the max, this was a stock with that $62 back in 2007, obviously fallen pretty massively from there. And then this was the big drop over the past, from $12 in 2021 down to $2.38. Now, this is also amid concerns of a potential bank contagion that the FDIC has all but reassured won't happen, but nonetheless, people are still pretty scared that it could happen. And banking is just not the place you want to be in right now. Maybe there's some swing trades there, but it is a little bit scary to kind of deal with what's going on with some of the banks. We've got Apple down 1%, Tesla down 2%, SoFi down pretty massively, 4.5%, now at 530. SoFi, we've seen swings from 510 to 570 back down to 530. Overall, I like that it's in the $5 range. It's to me, it's a nice buy under 6. But if we can get it below 5, that would be a little bit more exciting as well. Amazon down 1.58%, Spotify down 2%, NASDAQ, 11,428. So NASDAQ recovered really nicely yesterday. It was close. It was, look at this. Yeah, it was right there. It was at 10,982. So it went below 11,000 just 2 days ago. Recovering nicely, but we'll see at the market open kind of where it goes from there. The S&P as well is down to 385. So S&P down a whole 1.61%, falling below 393. It's been stuck between 380 to 400, really 390 to 400 over the past couple of months. And let's go to the 3-month. Yeah, the lowest we have on the 3-month is 380 or 387. Yeah. Well, today it's 385. So we're lower from that now. But outside of that, it's been harder to see kind of how low it has been really able to go. The highest we got to was 418 on February 2nd, and that was a bit of a bear market rally. And now we're back down to 380. And we're going from there. Amit, just sell some cash secured puts on SoFi under 5. Yeah, that's not a bad idea, especially if you want to hold a stock long term. I think I had a couple of cash secured puts on SoFi. So I have to see them. Star Buccaneers, hello. Alfred, morning, Amit, nice haircut. Thank you guys. A lot of you have said the haircut is nice. I appreciate it. It's going to last like this for a couple days, and then I have to go get another haircut because that's just the nature of it. Pete, what's up? TJ, what's up? Gabe, what's up? There's a guy called Lehman involved with Credit Suisse. That is also interesting. Now, it is really interesting that ChatGPT did say the market was going to fail. Seth Roth was up by March 15th. And who knows, man? ChatGPT was trained on data from 2021. So maybe something in 2021 said March 15th, 2023, everything's over. Who knows? We've got Palantir down at 772. Now, Palantir, I'll do a reaction video to the interview that Alex Karp and Joe Lonsdale, Joe Lonsdale was a former co-founder of Palantir, gave on Fox Business yesterday. Apparently, Palantir has a lot of money in treasuries. I mean, I think there was a Twitter exchange where Joe Lonsdale said they have something like $1 billion in treasuries, which means they're going to be yielding almost $100 million off that billion, or that 1.5 billion, which almost but guarantees they're going to be GAAP profitable this year, just by the very nature of them having a return on their capital. That might be a little bit of a trick for them. You throw on that other extra 115 million. That might be their profit for the whole year, and that might guarantee a GAAP profitable year, which would obviously be a good thing. And, it's funny, if Palantir actually predicted that the treasuries would get them to GAAP profitability, and that's why they were that confident because interest rates weren't going to go down, that could have been a very strategic move for them to promise GAAP profitability, which is basically what they did without saying it. If they knew that they were going to definitely get that incremental source of net income from the treasury bonds. Because then at that point, it's like, if interest rates aren't going to go down and you can pretty smart enough to take that bet, you can make some real money there and you don't have to bet on getting 55 clients that are new, right? Man's learned about bonds last night and talking about yields. Check out the podcast I did with Chris. Me and Chris broke down what a bond is for dummies. And he really did a good job explaining in depth, like what it means to like buy a 10-year treasury or 2-year or any of that stuff. So that podcast, hopefully you guys get some information from that. Vincent, what's up? Yo, I'm late. I need to watch 2 to 3 X minutes in advance. Come on. Lonsdale said Karp has about 1.5 billion in treasuries on Fox Business. Yeah. And look, this is the good thing about Palantir. I mean, when you have Google has God knows how many billions in treasuries, right? So if Google's making money off it, Palantir should be able to make money off it as well. All right, we are about 50 seconds away from the market open. We're going to see what happens. It's a bloody market. It is absolutely bloody. We've got a lot of red. Meta is red. Credit Suisse is red. We're going to see what happens to Credit Suisse. We might get halted. FRC, let's go to them. They were up. Oh, wow. Oh, my. FRC is down 25% pre-market. Whoa. This actually makes me feel really good because I didn't buy FRC, and then I saw all these people making basically 70% of their money in like less than a day. And I'm like, man, should have just bought. And then you're like, well, this is why you don't buy. Look at that. Right down to 29, down 24%. If you bought it anywhere above 30, you're max, you're down. Wow. Did not expect that one. Okay. Well, let's see what happens as the market opens. Here we go. It is 9:30 a.m., March 15th, 2023. Thank you so much. 205 people being here. It means the absolute world to me. The stock market is now open. Wake your ass up. The market is open. FRC down 23%. So it's about 30 to 29 bucks. Let's see where that goes from here. S&P 386 down 1.4%. Credit Suisse falling to 179. Now at just below 180, down 28%. Let's see where that goes from there. Meta 193, Teladoc 24, Hims 849, down 2.9%. This was at 11 bucks about 2 weeks ago. So this one's falling about 30%. Zoom 68 bucks. Roku $60. Palantir 776. Kathy actually sold CrowdStrike yesterday to buy more Roku. So her conviction continues to lie in the switch for digital advertising on TVs or whatever. Fisker 599, Coinbase 61. We've got Ginkgo that's down. Not too bad. It was down like 5% pre-market, now down 2.96%. Goldman Sachs $308. Apple 151. Tesla 180. So Tesla, relatively the same as yesterday from 178 to 180. So holding up decently well. Nvidia has not fallen yet from its earnings hype. Nvidia 237. Again, this might be one of those where the puts have not printed yet, but eventually they will print. Or Nvidia somehow stays resilient against it. I don't think Nvidia stays resilient against it over the next couple of months, but I mean, I could obviously be wrong on this. So we will see where that goes from there. Rocket Labs is down. Square is down. SoFi 537. Let's see if we can get SoFi back into the 515 range. That would be a nice buy if we can get it there. Google at 93.73. Oh, on these days also, if anyone's thinking of buying cash secured puts, on the red days is when you want to buy because the premiums. And so I'm going to actually look at what SoFi cash secured puts are right now. Because the red days is when the premiums are better because the risk is higher. And so if you can find something that offers a decent premium, might be worth it. 11,303 on the NASDAQ. So we're down 127 points into the open. Bitcoin Bitcoin performing relatively well. It was 26,000 yesterday, now 25,000, but still doing pretty well from the past couple of days ago. DNA average is 129. Yeah, my DNA average is now 140. I actually got rid of a couple of stocks in my SoFi account yesterday and just put it into DNA because at this point, like DNA is starting to get really, it's the risk reward is starting to get a little bit more exciting for me. Don't want to get a lot of it, but it's starting to feel a little bit more exciting than not. So some random stocks I had in my SoFi account, I just dumped those there. Yo, Amit, why are you online early now? Great for fellow Aussies timing wise. I've been online at 9:20 every day for like the past, I think 7 months. I've missed like 3 days in between those. If I'm correct. Yeah. We've been doing this since October pretty consistently. So always here, 9:20. Selling. Sorry. Selling. This one. Oh my gosh. I'm selling cash secured puts. Did you ever make a video explaining how cash secured puts work? Yeah. So I made a video called I just made 13% on my money in 2 minutes. If you type in 13% in 2 minutes, Amit, it'll pop up. But also TJ the Wheel Deal right here. If anyone is curious about cash secured puts, this is the channel. Type that into YouTube. Trust me, I did a podcast with him on Sunday. You will get your time's worth, not your money's worth, because he's not going to charge you anything. Time's worth of watching this guy's channel. This guy has made millions off of cash secured puts because he knows how to trade the wheel, which is what the strategy is called. And he will never say buying those cash secured puts, unlike me. He will always say selling. So please check out his channel. You will get a lot of information from there. Snapchat at 1012. Google. Oh, this is the wrong Google. This is $81. Google. I need to buy 93. Okay, let's look at some of the premiums we're getting on cash secured puts. Let's go there. So let's open up Robinhood. Good old hood that robs 1 cent every time you buy. So they say it's not commission free, but they take the commission anyway. It's the greatest marketing on the planet. They had to do what they had to do. All right, let's look at SoFi. So we're going to share the screen. Okay, so we have SoFi at 537. Now let's do trade SoFi options. All right, so we're going to go sell put. Can you guys see this? Can you guys see this? Yes, you can see this. Okay. Let's do expiration April 6th. Okay, so if we want, so this looks like the best one. If we think SoFi will not be $5 by April 6th, we can get $23 on putting up $500 of collateral. So if I did one of those and I press continue, that would be $500 of collateral. I have to buy 100 shares. Now that would be, if my math is correct, about a 4.6% premium we could get. 4.6% return we would get. So 23 off of putting 500 as collateral. Remember, you have to buy 100 shares, put $5. times 100. That's the strike price, $500. And then you would get, you would get $23 as premium, right? So let's see some other ones. Let's see April 6th, March 31st. March 31st, that premium's not as good. What about March 24th? Yeah, interesting. So April 14th is April 6th seems like the best. 23. That's the best one that I've seen, at least for the $5 one. All right. So that might be one of those that we want to look into. April 6th for $5. If I don't think SoFi is down by $5, I get $23 on my capital. So it's a 4.6% return. Not the juiciest premium, but also not the best. April 21st is a sweet spot. You can collect that easy theta for the first half of the contract, less stress. You can always close it out early. Yeah, that's probably that. In April 21st is, oh, April 21st. Yeah, you are right. April 21st. It's a $30 premium, which is, if we do 30 divided by 500, we would get a 6% premium. And we can always close it out early, as TJ said. So even if we want to get, $15 of that to make sure we don't get any risk, we could also do that as well. Optionsprofitcalculator.com. Okay, I'm going to go to that one in a bit. Yeah, I think I've used that before a while ago when I was looking at it. So premiums for SoFi are not too bad today. And again, today on a red day is when you want to think a little bit more about premiums, because premiums are better versus on a green day. Let's take a look at our favorite guy, Gene. He's saying something I kind of disagree with, but let's hear his thoughts about Apple being the safest place to go. Leander will go to his comment real quickly. You should mention that selling puts or calls is unlimited downside. You don't just get margin called, right? You owe someone, you sold the put or call to the option. I mean, yes, these are risky, but when it comes to selling a cash secured put, if the stock just falls below the strike price, you just have to buy it, right? So it's not really unlimited downside. Like if SoFi falls to $4.99 by April 20th versus $5, then my $500 that I put up as collateral gets executed. So I have to buy it at $5, but now it's at $4.99, right? So I'm down the difference between 500 minus 499. But my cost basis would be decreased because I already got that $30 premium up front. So there's not really unlimited downside from that perspective. Now, there's other ways where you have unlimited downside in options, but on cash secured puts, that wouldn't be the case.
Gene Munster, managing partner of Deepwater Asset Management, joins us now. Gene, great to have you with us. I'm not going to ask you about European banks or the banking system, but to the extent that tech stocks managed to rise on this narrative of a Fed pause because of the instability of the banking sector, has any of this changed your view of tech stocks and their ability to make gains this year?
It hasn't. As a reminder of my view, Melissa, I think the first half of the year is still going to be difficult for tech, for both big, mid, and small cap tech. I think that the back half of the year is going to be a great year and into 2024. And the substance of it is I still believe that even with a rate pause, the key factor here is unemployment. That still has been stubborn. Historically, that's the stickiest part of inflation. And all these gyrations within the banks and what we've seen across the liquidity and the money system, I think ultimately plays into what is the inflation question. I think that still is going to be where investors are going to resolve their debate about what's going to happen with stocks. And again, I think that inflation question is largely dependent upon hiring. And so I'm sticking with this view. I wish there was more optimism. I'm glad to hear about some of the potential pauses and rate hikes, but I think that in terms of invest in tech stocks in the near term, it's a little bit of a head fake. Again, all you need to do is keep an eye on that unemployment number. We need, unfortunately, to see that number inch higher to really take pressure off inflation and all.
So the argument that he's making is that if unemployment gets lower over the next couple of months, the Fed will obviously CPI will start to fall, inflation will start to fall, and the Fed will start to get a little more dovish. I don't know if that's going to be the catalyst because he's expecting a rally in tech stocks towards the end of the year. I don't know if unemployment is the core reason for why that's going to happen.
Ultimately, get to a point where investors can sleep well at night, knowing that rates aren't going to spike higher in the future.
Right. And in the meantime, consumers are being really impacted by high inflation, Gene. So I want to deal with some of the, the more recent news on some of the stocks that you follow so closely. Foxconn, for instance, warning about consumer electronics demand this year. How much do you, impute that onto Apple at this point?
Again, Foxconn was their contractor in China. Apple is investing like $700 million into India. So things are changing a bit in terms of Apple's manufacturing.
Well, it's something that should be absolutely considered. I also would look at how Apple is thinking about their spending with partners like Foxconn and some of the other suppliers. A few weeks ago, Apple came out in one of their filings and said that they're going to increase spending with component suppliers this year by 16%. I think about that when I hear the Foxconn news. And what that means is that they're spending more with their component suppliers. Some of that may be increased in component costs. Unlikely, given their margin guidance is for higher for the March quarter, surprisingly higher. I think what it means is Apple is still doing probably the best job of any of big tech in terms of navigating the storm. Again, the street's looking for 1% growth this year. I suspect that they're going to comfortably beat that, despite what we're hearing from Foxconn. No company is immune, but I think Apple.
I think he's a little too bullish on Apple. I don't know how many people are going to buy the new iPhones. I mean, I haven't upgraded to the iPhone 14. I don't know about you guys. I don't know. I think he's a little bit too bullish on Apple. Now, is Apple the best suited out of all the tech companies to grow? Maybe. I think actually Meta is in a way better situation given how aggressively they... Remember, Apple's down. Apple's not down. Apple was 180 at its peak in 2022. It's 150. Meta was like 379, and it's barely able to maintain 190. So I think if anyone has a little bit more upside, it would be Meta, but we will see. Gabe says SoFi is officially below a price to book of 1. Any cash secure put on SoFi would either make you money or get an amazing cost basis. That is correct. And that's why I just got 2 cash secured puts on SoFi for that April 21st day. So I'm getting a $60 premium by putting up $1,000 of collateral, which is not the worst thing in the world. We'll see if SoFi is $5. If it is not if it is $5.01 by April 21st, I get $60. If it's not, then, well, I would know if it's tending towards not to be before, and I might close it out early. Or we might get shares at $5, which to me, getting SoFi shares at $5 is not bad. And so if we have to get SoFi shares at $5, not the worst thing in the world. So I actually really do like the premiums on SoFi today. Now, obviously, if you have a lot of money, the cash secured puts yield you way more, right? If you're playing with like 50,000 in collateral, you might, you can get a lot more than I'm getting $60 on top of 1,000. But even if you don't have a lot of capital, just to get, an extra $60 is not the worst thing in the world. Apple Car coming soon, bro. That is true. Apple Car is coming soon. Innovation is no longer there after Steve Jobs is gone, but you have to give Tim the credit for his ultra cost savings on operations, especially logistics and product packaging. Tim, there was a good video done by someone on YouTube. Tim Cook is actually the reason for why China is so integrated deeply with Apple. Steve Jobs in like 2000 told him, hey, the demand for the Mac is going to be crazy. Can you get us the supply? And he flew to China and he negotiated all these contracts, right? Like pure operator, got the job done. The only problem is you got beholden to China. And if you just did that to India, if they had just gone to India instead of China, Apple's entire world would be different. Now, granted, India did not have the infrastructure or the manufacturing capabilities to actually be able to get them that many products at scale. But they got in bed with China, and now they're kind of stuck with China. Your cost basis would only be $470 after you deduct the premiums they paid you up front. Yeah, that's why it's like having SoFi at $470 is like, I want SoFi at $4.70. And so even if my even if I get executed because I got the $60 premium and I have to buy 200 shares of SoFi, my cost basis would be $470 on that, which I'm totally fine with, right? That's why cash secured puts are so cool. And that's why when I learned about it a couple months ago from TJ and Gabe, it was exciting because it's a way to actually make money in the meantime of buying a stock that you want to buy without having to outright buy it. I think it's one of the option strategies that any even newbie investor can understand. Like when I told my dad it, he was like, this is genius, even though I don't think my dad fully got it. But like when he got the gist of it, he's like, oh, that's really cool. That's really interesting. It's one of those, I think, more basic option strategies that exist, to be honest. There's other stuff that's a little bit harder to understand, but that one is not the worst thing in the world. All right, let's go back into the market, see what else we got. What will happen to mortgage rates now? I still use my iPhone 6. Who knows what's happening to mortgage rates now? I mean, they're still at like 7%. The Fed is not really easing up on those. You didn't know Google owned Android, guys? Wow. This is why I need the soundboard. I need the soundboard so I can press a button that's like, that was dumb. I'm just kidding. But like, yeah, Google owns Android. Google, of course, they needed to own something when Apple decided they were going to monopolize the App Store. And so Google came back with Android. Goldman Sachs at 308, Apple at 151, Tesla 180, Nvidia stuck at the 237, SoFi 540, Square 72, Microsoft 260. Microsoft recovering decently well. I think they have an event either today or in the next couple of days where they're announcing some AI stuff. GPT-4 is out. I saw some demos with it, and it's pretty crazy. Like, people can make full videos by asking their new ChatGPT plugged in with GPT-4 what to do. And it's pretty wild. It makes you wonder how valuable content is going to be in the future if everyone can create it that easily. But I actually think that content becomes, or authenticity and community becomes even more valuable if everyone can make like unlimited amounts of content. The only thing people are going to be attracted to are stuff that's real, right? Like, you can only get away with the fake stuff for so long. It might help with a marketing campaign. I don't know if it helps with like building a full community. So I don't know. I wish you didn't have to buy 100 shares with cash puts every time. Would love to buy them on Nvidia, but I don't have 20K. Yeah, I mean, look, so Nvidia's Tesla, you need to have a lot of money to do it. So those are a little bit more expensive. But obviously, with some of these other stocks that I still think are great bargains, you don't need to have that much money. What exactly is causing Credit Suisse to fall 1.5 trillion over 50,000, put down over 30%? Well, the main news today is that the Saudi National Bank, which has been their biggest supporter, just isn't going to support them anymore. They're not going to be giving them any more financial assistance. And like, the market takes that as like, okay, if that national bank that has been supporting you for years decides not to support you anymore, then maybe there's something going on internally that they know about. Credit Suisse now down 24%, kind of stuck in that 189 range. Let's go to FRC. Down 14%. So FRC recovering a bit from being down 24% in the pre-market, but it's still down 14%. And this is why it's kind of scary, right? Like, if we go to just the 5-day, right? We saw it was down to, on March 13th, it was 17. And so people were buying here, and then it ran up to 50 in that same day, right? After hours. So you almost made, you almost made a 3x on your money, right? Like, you're like 2.7x on your money. So that's amazing. In a day, that's crazy, right? That's absolutely crazy to make 200% on your money in a day. But then you've got it starting to fall right back down from 50 to 30. So it's not, if you bought at 17, you're still in the green. But if you bought anywhere along this 40 range, because you're like, oh, it'll just go back to 80, which it was at 80, by the way. It was at right here, 88 on March 10th. So if you saw it go from 17 to 50 and you're like, oh, I missed out, it'll go back to normal. There's no contagion. Silicon Valley Bank got bailed out. I'm going to buy it at 40 bucks because it'll go back to 80. So that's where I'll make my 100%. Now it's at 33. And the question becomes, does it fall? Oh, it got halted. Wow. Look at that. It's halted right when I'm talking. There we go. There's the halt. It got halted. That's incredible. Why did it get halted? Why did it get halted? Wow. Huh. It wasn't moving weirdly to me. It was down 14%, but wow. Very interesting. Very interesting. FRC down 14%. Now halted. Wow. Did not expect that to get halted. Credit Suisse didn't even get halted. Credit Suisse didn't even get halted. Interesting. Okay. Well, I guess we'll see when that happens. When a mid hits high notes, it's serious. My bank won't allow me to trade options because I'm unemployed. Mind you, my portfolio is worth about 250K. That's so interesting because Robinhood is offering me to give margin like every single hour. And I'm like, no, Robinhood, I'm not doing it. They're like, but you want margin hood. I'm like, no, Robinhood, I don't. What's halted? FRC. Wow, that's interesting. It's weird your bank won't let you do options, though. I mean, that's kind of dumb. This channel hyped me on Pouncer, and I'm down 65% of the shares. I don't think I will ever see that money back. Look, I think Palantir is a very long-term winner. And if you've been following some of the videos on the channel, there's a lot of reasons why I think so. And this is one of those things about, it's one of those things about a company where it's like, you're wrong in the short term, but if you know what you're doing, it might be one of the best opportunities ever in the long term. And we just don't know that, right? That's the hard part. We just don't know. But if it does end up happening, it's going to be it's going to be something cool because you stayed along for the journey. All right, let's take a look at Mohammed El Iran speaking about bank deposits being safe. Here we go.
Allianz and Gramercy advisor and president of Queens College, Mohammed El Arian, joins us now. Mohammed, great to have you with us.
Thank you for having me.
What is the concern here that we are witnessing the beginning of a full-blown banking crisis where there are impacts of what's going on in Europe on the U.S. and vice versa?
I think we're recognizing three distinct things. One is a set of bank management issues and lapses in supervision. So the three U.S. banks last week, Credit Suisse, which has had problems for a while, that's very specific. Then stepping back, we're recognizing that both the private sector and the public sector haven't adjusted enough to what has been a mishandled change in monetary policy regimes. And you heard the former senator speak to that. And then there's a third element, which is the flip-flopping of the Fed most recently added interest rate volatility to a situation that already had economic and financial fluidity. So these three things have come together, and the equity market is realizing what the bond market has realized for the last few days, is that it is not just one or two institutions. What we saw in one or two institutions is exposing something much bigger that we have to reprice to, including that banking is changing because of what's happening right now.
We don't know what we don't know, Mohammed, is what it feels like now. And that's kind of scary. I don't want to cause fear out there, but I mean, if you're saying that, the regulators don't know what's going on both here as well as in Europe, and there are all these risks embedded in the balance sheet, whether it be liquidity risks or interest rate risk or both, that's a cocktail for terrible losses.
Yeah. So let's say what we shouldn't worry about. Our deposits are safe, and that is really important. It wasn't a particularly elegant way of doing it, but
now, I think I tend to agree with Mohammed here because, I mean, his argument is the same argument that I think a lot of the VCs were making, which is, look, deposits are safe and you didn't cause a run on the banks. And this is the position that I ultimately agree with. Like, could we all imagine today if the FDIC did not guarantee depositors would be made whole, and how many more people would start going to their regional bank? Because if it could happen to Silicon Valley tech startups, of course it could happen to a mom and pop business that's banking at a regional bank. They would immediately take their money and go to big old JP Morgan and see, and then just feed Jamie Dimon's pockets. Let's go to JPM actually and see what's going on there, where 129 to even JP Morgan down 3.89%. JP Morgan on the RSI is at 35. And JP Morgan on the 6 month, 101 was the lowest on JP Morgan October. So that October dip was just so juicy. Even a stock like this is still not at its lows. 144 was the high. Okay. And then let's go to Bank of America. Bank of America, by the way, just got a $1 billion credit line from Nike. I'm trying to investigate this. Me and Chris were talking about it last night. We kind of, Bank of America looks like it's not that there's some major issues, but there are some things to worry about when it comes to Bank of America. Why are they getting a credit line from Nike? Like, shouldn't they be giving out the credit line? Like, that was very surprising to me. Bank of America down 3% today on at $27. If we go to the 6 month on Bank of America, 38 was the high. And then let's go to the 1 year. 43 was the high, or 48. So February 2022, 48. Now it's at 27. And the dividend on this stock is there's a 3.6% dividend. It's down decently from 2022. And obviously this big red drop was because of this whole SVB stuff. With the dividend of 3.16%, I think Warren Buffett owns a decent amount. I want to see how much does Warren Buffett own of this stock. It is a little bit more interesting looking into Bank of America. Warren Buffett, Bank of America ownership. Thank you for the super chat, $2.22 from Sergeant Fighter. Great channel, Godspeed, sir. Thank you. Appreciate it a lot. Means a lot for the super chat. I wonder how much appearance fees he gets for. I actually don't think these people make money on getting on CNBC. I think they get the attention, and that's what they do it for. I don't think they actually get paid for it. I think like maybe if you're a regular contributor, you get paid for it, but some of these people, I don't know if they get paid. Warren Buffett's position in Bank of America is currently worth $28 billion. That's 9% of their entire equity portfolio. So it's their second largest holding. So Buffett owns a lot of B of A, and B of A is down pretty significantly from its high. I wonder what Buffett's average is on that, but there's a decent dividend on that. So let's go to Schwab as well. Schwab is down 56. So this was $86 January 5th. Now it got to a low of 45. Now it's at 55. This is another one that's interesting. The CEO bought 50,000 shares on Tuesday, trying to signal to the market that he thinks they're grossly undervalued. I think they lost like $40-50 billion of market cap, some insane number. So this one is also trending a little bit more to the downside. Bought some more VLD. Joel, what's up? Mitch should go on CNBC. That'd be awesome. One day if Palantir makes it, they're definitely going to have some people who know about Palantir. This is what happened with Tesla. They had a bunch of random people who were on Tesla since the beginning start going into the mainstream media because they needed to like understand what was going on with Tesla. All right, let's look at this. We're watching for 3,500 on the S&P for major support. Let's take a look at this.
Our next guest has been watching key technical levels in the market. Joining us now is Katie Stockton, founder and managing partner at Fairlead Strategies, as well as a CNBC contributor. Katie, good morning to you. So what are we looking at this point? Does it change at all with what the markets are doing this morning?
Well, it's definitely evident that the bear market cycle still does have a hold, and we've certainly seen a very sharp pickup in volatility. And by that, I mean not only the VIX and its big jump above the 200-day moving average, but also day-to-day volatility. And that is more characteristic of a bear market cycle move. We've had something close to 80-point swings on average in the S&P 500 over the past week or so. And that is very unsettling and needlessly so. I mean, it just feels like we have a breakdown. It's evident the momentum is to the downside. And with that 3,900 level having been taken out by the S&P 500, to us, the 3,800 level isn't that strong as a support. We are watching 3,505 as the next major support for the S&P 500, and that is based on a longer-term level. It's a Fibonacci retracement level, and it also captured, of course, the October low. So that, to us, is what frames downside risk here, and we're expecting more of the same in terms of volatility.
According to your work, have we seen the peak in rates?
You know, the peak for now, I would say we actually have the DeMark indicators showing signs of upside exhaustion across timeframes for 2-year yields. So that goes for the daily charts, the weekly charts, the monthly charts. And the takeaway from that is that we're in the midst of at least a counter trend move versus the steep uptrend that we have become accustomed to. So we're looking for about 9 months or so of sideways to lower with a lot of short-term volatility from yields. How that resolves on the back of the 9 months, we can't be sure. But for now, they do look lower over that time frame.
FRC open again. Let's check that out. Her technical analysis, the fun part about technical analysis is it might come true, it might not come true. She's not alone with a lot of other people on Wall Street that are saying, clearly Dan Niles, one of the guys that I actually like, saying the S&P to 3,200, but that has not happened yet. And maybe he's right on that, but they are very bearish on where this stock is ultimately, or where the market's going. FRC open again, down 15% at $33. This is an interesting one, man. I mean, traders must be having a field day with this, trying to figure out which way to play it. You could make money on it going down. You could make money on it going up. You could go long for a little bit. I mean, even if it gets like $37, you made a little bit of money. This is a volatile one. This is one that's moving up and down very aggressively intraday. And so we're going to see what ultimately happens with this one. TA is 50%. The rest is price. This is a great. I think I saw someone tweet. I think Darton tweeted this. He was like, technical analysis is like astrology for men, which is so true. But for some reason, women like astrology a lot more than men. At least that's what I've noticed in my life. Some of the friends that I have that are women that I've talked to, they're like so into astrology, and I'm just like, why? Like none of this shit makes sense. Like, well, if you're a Pisces and you're rising, blah 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 blah. It's like, okay, interesting. How about we just like go get shit done before we worry about if it's meant in our fate or whatever, all this stuff. Now, granted, it's interesting stuff to look at and think about. I just never was like super deep into it. But technical analysis for men is basically astrology, because none of that shit somehow makes a lot of sense. You're such an ass. Now I'm just an area. Oh man. Yeah. I mean, look, I embody the characteristics of a Scorpio, and I guess because like I've researched, I am a Scorpio. I've researched. I'm like, yeah, that is like me. But whenever I say I'm a Scorpio, immediately you get that look like, oh, he's a Scorpio. Great. I mean, did you see someone brought 4K worth of puts on SVB out 2 weeks ago at 100 strike? They made 1.1 mil off of it. It was absolutely insane. They must have known something. Yeah. I mean, look, there were a bunch of articles on Seeking Alpha, out of all places, showcasing that the venture debt that SVB had on their balance sheets was not going to do well. I mean, this stuff goes back to like January 15th from some of the articles that I saw. So, I mean, people were researching this one and they knew there was an issue coming. I don't think you have to be a genius to figure it out, but you did have to be deep into the market to at least understand some stuff was going on. Astrology is space racism and TA is stock racism. You just explained the difference between men and women. Men think about getting shit done. Girls think about astrology. Not all women, obviously. I'm just saying that, you know, it's from the experience I've had, a lot of women do like astrology. Like no guy I talk to really cares about astrology that much, you know. At least no guy like that I'm friends with and stuff. All right, I just saw the Rock video on CNBC. It's 11 minutes, so I'm probably not gonna be able to go through it. But apparently, the Rock was on CNBC a month ago, and yeah. So if the Rock can get on CNBC one day, I gotta get on CNBC. All right, that's it for me today, guys. Thank you so much for being here. Please make sure Twitter in the description would mean the world if you check out. Follow me on Twitter as we cover the market and the updates. It's going to be a very interesting thing to see over the next couple of days. What happens to FRC? What happens to Credit Suisse? And PPI came in phenomenally well. If you didn't catch me talking about it in the beginning, producer price index came in negative 0.1% when we expected 0.3% month over month, 4.6% versus 5.3% year over year. So PPI came in great. CPI came in great yesterday. Next month, if we can get that CPI under 6% and get PPI to match that, we're going to start to reduce inflation. And then the question just becomes, does unemployment need to get at a certain level in order to really exacerbate the inflation collapse we will hopefully see this year? And if that's the case, we're going to have a market that rallies. If not, then we're going to be stuck a little bit more in where we are right now. Okay, that's it for me. Thank you guys so much. I appreciate it. Me and Chris will be live on a market recap today, 8 p.m. So please check us out there. And we did a podcast last night if anyone wants to check that out. Thank you guys. I will see you tomorrow on the market open. Bye-bye.